All right. Hello, everybody, and welcome to the Convex live call. Today's topic is all around nation coins and the future of currency. And got a few people with me on the call here today. I've got Rich, who is as well as a sort of key collaborator in building Convex, is also the CEO of a startup in the payments space. So very interested to hear all of his perspectives. He's got a long background in crypto, and a regular uh, guest on some of these calls. And I've also got Quarkside, who is among his many talents. He's a member of the UK's all-party parliamentary group on central bank digital currencies. And it was actually his idea to have this call today and talk a bit about what's happening in the CBDC space, and maybe a bit more, taking a bit more of a future look at what this means for the futures of currencies and nation states in general. So plenty of opportunity to explore some blue skies ideas here. So hi Rich,
Thanks.
hi
Hi, Mike.
Quarkside,
Thanks for having us.
great to have you on as always. Um, so Quarkside, why do you tell us a little bit about your experience recently talking with the UK parliamentarians about CBDCs? What were your observations?
Well, it's very clear to, I think, everybody there that there are going to be some central bank digital currencies, um, and that there's a lot of opposition to them for a number of reasons, or political reasons, and possibly the banks as well. And they are very seriously thinking there are going to be two sorts of CBDCs, although they might not both be called that. One is the wholesale CBDC for big banks and intercompany trading between central banks, right? And that could and probably is already done now on centralized systems. They probably don't see a need for a decentralized system, right? And they want utter control about who can do what and what the constraints are on that. On the other hand, there is what they've called the retail CBDC, and this is meant for payments used by anybody and everybody being just the same as cash with no traceability, right? So anybody can spend anything on anything and nobody's going to follow them. However, there are certain organizations who don't wish this to happen, and they are talking about they're going to need legislation, right, for stable coins and CBDCs. And unfortunately, it may take 5 years before this is ever gets enacted. So they're trying to delay, right? Uh, in fact, um, people using a I'll call it a British pound, a stable, well, it's a stable coin or a nation coin. It's one of the debates, what you want to call it, but it would be something that would be issued by the Bank of England and work exactly the same as cash. So you could buy anything, sell anything, and freely trade it without any limits whatsoever. But on the other hand, people are saying, oh, well, because of anti-money laundering, etc., perhaps there should be a limit on the size of wallets you can have, a limit on the size of transactions, etc. So they don't really want, right, uh, an exact equivalent of cash. Or some people do and some people don't. So that's the debate that's going on at the moment. And there's there's confusion in the definitions of stablecoin, nation coin, CBDC, and I'm hoping that Mike can put some structure into what's going on and what role Convex might be able to play in the whole infrastructure of money. I think it is. We'll call it money.
Sure, sure. I think
That
one of the
enough?
things that really stood out there is you highlighted the confusion and conflicting interests in this space, which I think is pretty pretty prevalent. Yeah. So we have this sort of problem that CBDCs originally meant central bank, so it really meant just the wholesale um, aspect of the dealings that the banks had with the central bank, i.e., you know, what funds they have on deposit with the Bank of England or the equivalents in other countries, and that doesn't actually need it to be a, you know, that can be done with and has been done for a long time using fairly traditional centralized processes, and really it's just a case of creating a digital currency that the banks can use for settlements among themselves and with the central bank, and no one ever really sees it outside a relatively small sets of participants. And I think you're right. There's not actually much point in decentralizing that. Yeah, it's not designed for an open public set of participants. It's a fairly closed group of people who all know each other, all have to go through some very strict regulations to get invited into the club. It's a closed shop effectively. You might as well run a reliable centralized system to operate all of that. So there's not much case, I think, there for decentralization. I think the retail CBDC is much more interesting. You know, what happens when you actually put it in the hands of regular users, and what kind of controls, restrictions, capabilities does that have? And I see massive confusion in this space, and I think you highlighted a couple of them. The programmability, I think, is probably the most abused word, because no one seems to have a common definition of what it means. But normally it means that there is the ability to exert central control over what happens to people's funds. So they want to be able to block people's funds, they want to be able to freeze people's funds if they get sanctioned, they want to be able to put things like transfer limits, these kind of things. So programmability in the sense of CBDC usually means less that you can do with the currency than cash. Whereas I think that's a missed opportunity. I think it's incredibly short-sighted. What they should be thinking about in terms of programmability is, can you use it to build open economic systems? Can you build smart contracts? Can you actually use it in decentralized financial infrastructure? And I think mostly they're not thinking about that in the right way. They're not seeing it as the opportunity that it is, and instead as a risk or a potentially destabilizing factor or a threat to centralized control. So there's going to be this tug of war, I think, between the people who actually want currencies to evolve and become more useful in a more open, decentralized economy, or do people want money to be very tightly controlled in the hands of a few large organisations and a few corporate monopolies and these kind of things? So yeah, great question on the chat. Can retail CBDCs create larger corporate monopolies, e.g., Walmart, Amazon, and Apple? I'd have thought so. Absolutely. I mean, this is a centralised system can pick and choose who gets access to it and at what level. Yeah, so you've got an automatic gatekeeper on who can interact with your centralized system, and yeah, that could easily entrench corporate monopolies if that's the case. So I would be concerned if retail CBDCs go in the direction of saying, okay, you need to be an government approved party in order to participate in the digital economy, and that would require some degree of these companies agreeing to do what the government wants or to operate in ways that the government says they must, and probably very large fees and costs that would exclude small businesses from doing that. Yeah, question from Quarkside.
Yeah, it's just a point that came up from the meeting is that a lot of it is like the geopolitics getting in the way, because apparently the Americans are very much against it, and they aren't going to set up these stable coins because they want to retain the US dominance in world currency exchanges. The EU are going into a euro dollar, right, because they want to miss the efforts of MasterCard and Visa, right, to control the payments inside Europe. So they're trying to free themselves of the monopolistic money changers, whatever they're called. So that also came up in the meeting. So each country, and China's got its own agenda as well. So the geopolitics involved. So let's see how it goes. But we've got to start off in one country.
The one distinction that I wonder if it's really this way with retail central bank digital currency is that unlike the current banking system, where money's mostly digital anyway, but still requires commercial banks for transactions between accounts, with a retail CBC, that would be a direct claim on the central bank, and it would make it a simpler process, potentially more secure and faster transactions. At least that's the claim. Given that, you start to disintermediate the commercial banks.
Yeah, and obviously they're not keen on that. Yeah, they're trying to set up a CBDC model where you have to go via a bank.
Right.
Yeah, so you have to use a bank account with one of the approved list of banks. Again, that entrenches the monopoly of certain large, or let's say maybe oligopoly of large financial institutions, because they would restrict who can get access to the digital currency and how it's being operated. So yeah, that's absolutely going to be an issue, and likewise with the big payments providers, your payments networks, Visas and Mastercards. I mean, they don't have an interest of people having a digital equivalent of cash, because that's obviously a replacement for their raison d'etre. Yeah. So, but of course, that means there's a huge bonus for people. Yeah, and I think this is what I think is exciting about this topic, is there is this incredible potential to liberate people from having to pay these absurd transaction fees every time they participate in the economy. Yeah, whether that's making retail purchases, whether it's transacting with financial institutions, whether it's making financial decisions with your savings or investments. That's all being taxed, and I mean taxed in the sense that people are taking a big cut, rather than necessarily the government. Obviously, the government is doing that to some extent. Now, basically, there's something wrong in economics when the price of something is wildly divergent from the cost of doing it, and the fact that you might be paying 1 or 2% on financial transactions, in a time when it's just a few bits and electrons that make the actual transfer work and it's fully automated, it absolutely doesn't cost 1 to 2% of the value of the transaction to execute those transactions. The marginal cost, if you like, is tiny. So the great opportunity, I think, is to empower people to do virtually zero fee financial transactions in a secure and open and decentralized way that everyone can participate in on a level playing field, rather than having a few fairly monopolistic financial institutions taking slices off the top of everyone's money every single time something happens in the economy, which is what currently happens. Now, of course, that's against the interests of some of these institutions, so they're going to be fighting it. But I think in terms of the interests of humanity as a whole, there is a big opportunity here. So it's why I'm personally excited about this topic. How do we make currencies work better for people? And
and on the flip side of that, there's still an infrastructure that needs to be paid for and maintained and so forth. So I think there still, and this is kind of what you see in the crypto space too, is even though everyone eschews the banking system, what they're really looking to do is take a cut themselves as well. Just even trying to change one coin to another seems like it's an exorbitant fee on some of these centralized exchanges. So I think you can drive the price down, but at some point there still has to be like a small tax to keep the infrastructure going.
Well, yeah, I mean that's what you ideally want. Yeah, I mean an efficient economy is the one where price equals cost. Yeah, so the price that you pay is equal to the cost of actually providing that infrastructure. and obviously it's fair that you pay the people who provide the infrastructure and the services that make these things possible. The problem is when there's plenty of people who could provide that at a low cost, but they're unable to do so. So you've got no competition.
Yeah.
If someone's
Yep.
able to charge 2% and someone else is willing to do the same thing and charge 0.2%, in a free market, the 0.2% would win. Yeah, that will be the company that succeeds as a service provider in that market. But if you've got these monopolistic controls, if you've got these restrictions against new entrants or against people offering alternatives or enabling switching, then it's very easy for someone to defend their 2% fees if there's no way for anyone to come in and compete with that. So I think that's one of the fundamental problems. You've got a very uncompetitive market that is particularly at the retail end. If you're talking about financial transactions between big banks among each other, then yes, the margins are slimmer. They know what they're buying. They know how much it actually costs. They can negotiate. They've got options. Etc. But for regular users in the economy, by which I mean average people as consumers, as individuals, and small and medium-sized enterprises, just don't have access directly to the financial infrastructure. And that's what I think we're trying to change at Convex. We're trying to create open economic systems where everyone genuinely can come in on a level playing field. So we've got a few more questions from the chat. Let me just check this out. Automating the banking system will kill a lot of jobs. But I mean, that's a good thing. If people are doing jobs that aren't actually creating any value, if it's cost without providing any benefit, then it's better that those people, find something better to do than add overhead to the system. And you could even pay them the same amount of money and say go on a holiday, and at least they'd have better lives. They wouldn't be doing any work, and they'd still get the same amount of money. But you could probably find a fairer way of finding an alternative thing for them to do. So interesting question. In middle skilled jobs, does it create more inequality in income? I mean, if you create a good open economy, I think it creates a lot more jobs. Because suddenly you enable people to build small businesses, creators, freelancers, innovators. It suddenly becomes so much easier for people to operate in all of those spaces. So, what I think we should be trying to do is slim down these big bureaucratic corporations that are adding cost for very little benefit, and instead grow the open economy and the decentralized economy that would be empowered by having these sort of financial shackles taken off them. Or at least that would be what I would hope, and obviously that requires some wise policy making to facilitate that, and that's not always a guarantee, but that's the way I think we should be thinking about how we would like things to move. So
the one thing that really benefits that is the decentralization of these kinds of systems, because that allows more participation. So more competition in terms of driving the cost of the infrastructure down.
Exactly. I mean, I think decentralized has to be the way to go. And, I think that highlights another important problem with the way that people are currently thinking about CBDCs. They're very much thinking about CBDCs for one country, or maybe a small set of countries collaborating. But that's understandable. If you have a centralized system, there's no way you're going to give centralized control to another country for one of your most important assets, being your monetary system. So every country is going to do their own. And of course, then you've suddenly created a massive problem that you now have all of these different, slightly incompatible central bank digital currencies that don't talk to each other. Interoperability is a nightmare. Yes, you can find people who are a bridge, but then guess what? You've just added another layer of intermediaries and another layer of security risk where things can happen at bridges, and often do, where money gets lost or appropriated. So you're setting up a mess basically by having all of these
And these intermediaries want to get paid.
And they want to get paid, yeah. So you're swapping one set of transaction costs to another set of transaction costs, and yes, maybe there's more competition among such intermediaries, but there's no guarantee of that. Particularly if they have to got some lengthy sign-up process for each CBDC that they want to work with, you're only going to get a few companies that are actually going to have broad coverage of a lot of the CBDCs in the world. So you've got this natural concentration again towards sort of monopolistic power. So I think it's a really bad model. Yeah, and I think
yeah, and there's currently over 100 countries that are in various stages of exploration of CBDCs.
I think that they're
like
missing the alternative, and this is actually a great prompted by one of the comments by Kamuri in the YouTube chat. So I really like the idea of nation coins, and let me explain what a nation coin is. A nation coin is a decentralized currency, so it's running on decentralized networks, so proper decentralized networks like Convex, and it's like a stable coin, except the nation coin is a nation state backed stable coin. So it's basically the nation state proclaiming that this is equivalent to its own currency. Yeah, so it effectively declares the nation coin to be its own currency. And what that probably means is that the central bank would be responsible for issuing and governing and controlling the nation coins. And I say nation coins because the whole point of nation coins is that you have multiple of them. You have a nation coin on Convex, you have a nation coin on Ethereum, you have a nation coin on whichever other decentralized networks you're interested in, and they're all equivalent, yeah, by government guarantee or legislation, or central bank guarantee or legislation, however you want to set it up for your particular country. Now, why do you want to do this? Why is this better than a CBDC? Well, the first thing is it is global instantly. You get the global nature of these decentralized networks. So if you're interested in your currency being used internationally and frictionlessly, you want to be on a global network. Yeah, and there isn't going to be a global CBDC, so there's no global CBDC network. So decentralized networks are your natural best option. That they're already designed for this. They're designed for the ability to have support for currencies and tokens and international exchange. It's kind of the sweet spot of the technology. Use the right tool for the right job. The second reason I think it's much more compelling is that it enables real programmability. So the fact that you can now use the nation coin in smart contracts. So if I wanted a nation coin, if I wanted to do billing or salary payments, for example, I wouldn't want to pay my employees in a token where my employees are unsure about the value of that token and whether they'll be able to redeem it or not. Yeah. Even a stable coins have risks. Yeah, we've seen plenty of issues with stable coins in the past. Yeah, but a nation coin actually is central bank backed, so you've always got that guarantee that this is equivalent to cash. So so you'd be happy to take and receive payments in your own nation coins. So it actually really does enable the real economy to sort of adopt it. And it also opens up the new opportunities. So if you talk about decentralized finance, all of the opportunities that DeFi can bring, that all becomes possible with nation coins. Basically all the good things about stable coins, and there are a lot of good things about stable coins, a nation coin does those and more. Yeah, because it has that extra security of the government guarantee. And of course, because it's the government issuing it, you don't need a third-party stablecoin issuer. You don't need the risk, the regulatory problems, all of the issues around stablecoin issuance, and that's a challenging thing in its own right. and of course you end up with one, yeah, or one per network, let's say, because that will be the one that the government specifies as its nation coin. So, question in the chat: nation coin on many networks? Well, because there are many networks, yeah, and if you want your nation coin to be usable in as many use cases as possible, you would want a nation coin on different decentralized networks so that it's usable on each of those. If you don't, then you just cut yourself off from some segment of the decentralized ecosystem. Once you've decided to do nation coins, you might as well do them on as many networks as you can, reasonably support, because there's not much downside at that point. Yeah, you've put in place the infrastructure to manage nation coins at your central bank and do the issuance and all of these kind of things. It doesn't take long to add to a spreadsheet. Okay, we've got another version. So if you want access to as many decentralized ecosystems as possible, you would need multiple nation coins. And if you don't do that, then people just have to bridge your nation coin to other places, and then you've got the whole problem of putting in place bridges again. So,
and then is the liquidity then at the central bank treasury?
Effectively, yes. I mean, the central bank is the issuer and the redeemer of nation coins. But I don't like the use of the word liquidity in this context. I mean, nation states print their own money, yeah. So
right.
There's no fixed. They don't have to keep a reserve, yeah. I mean, they can do what they like. They can print it. They can delete it. They can, a lot of nonsense goes on in central bank accounting and all of this. But the basic fact is governments print money if they want to, and they can destroy money if they want to. And
let's take Venezuela as an example, right? So to solve the Venezuelan problem, the lack of trust in the economy and papering the streets with the currency, it would be that much easier for them to switch over to a Bitcoin-backed nation coin, wouldn't it?
Yeah, but let's not say Bitcoin is not a nation coin. Yeah. So,
no, I know, but if the reserve, the problem there is the reserve, right? Nobody trusts them, so they are.
So I mean, effectively, if no one trusts your government to maintain the value of the currency, then that currency is going to have some significant problems. But one of the great things about nation coins is because you have some degree of assurance on the operation of decentralized networks. You know what the rules are. You can see the code. Yeah, you can see, who can stop me from spending my nation coin. And in the ideal world, it's like cash. Yeah, it's freely transferable, and it works as a true cash equivalent. And in that case, you could see plenty of countries saying, in fact, I'm happy to use some other country's nation coin as my currency, because I'm not worried about centralized control of a nation coin, whereas I would be if I was adopting someone else's CBDC. Yeah, I could be cut off at any time. I could have my funds frozen. Yeah, whereas if I'm using a nation coin, I can see that, okay, it's on a decentralized network. Yeah, there's no button that the central bank of that country can press to stop me using their nation coin. Yeah, they might have restrictions on redemption or something like that, but even then, other people can redeem, so my coin still has the full sort of exchangeability value potentially. So people, I think, would be more willing to use a nation coin than they would be to use another country's CBDC for sure. Check out Lunar Terror. Yeah, I mean, that's a good example of fun things going wrong. Stablecoins are an imperfect solution for the lack of nation coins, basically. Yeah. So why do we see all these stablecoins? It's because people want a currency which is pegged to a nation-state currency. Well, why don't the nation states just make them? Yeah. Way easier to do that. I mean, we could make these we could go live with a nation coin in minutes on Convex. Yeah, creating a new currency on Convex is a few lines of code. Yeah, and that's probably includes setting up the permissions for the regulator to mint and burn. Yeah, so it's a very practical way to get to a digital currency that is globally usable, that enables the future digital economy with smart contracts and decentralized finance, and you empower your citizens from pretty much from day one. So that's why I like the nation coin idea. It's the smart move, and you don't have to wait 5 years to do it for someone to pass CBDC regulation. I mean, you'd probably need some legislation to approve the backing of nation coins by the central bank, but it wouldn't in any way be as arduous of trying to build and design a CBDC model. And I think that's the way to go for forward-thinking countries. If you actually want to be at the forefront of innovation, why spend years building a centralized CBDC that probably won't work, and even if it does work, won't be fit for the global digital economy. Whereas instead you can just go this nation coin route and have your own currency up and running quickly and efficiently, and have a well trusted decentralized network act as the infrastructure. And obviously the network has its own way of paying its own infrastructure providers, but that will be much cheaper, I guarantee, than having a bunch of people doing bridging and financial intermediaries taking more monopolistic cuts on the transactions made. So that's my at least my vision for nation coins, and what countries, if they're smart, should be doing. Now obviously some countries might not approve of this, but if the US was smart and they realize they're going to lose their dollar dominance, then they might as well go full in nation coin. Yeah,
Right.
because you might as well have the dollar continue to be a global reserve currency, even if you're giving up some of the control you have over it. That's probably better than having other countries take that away from you. Yeah, or at least be on a level playing field with them. So if the US was smart, they would realise that they can't hold on to US dollar dominance forever, and recognise that as a way forward. And smaller countries, it's a no-brainer. Yeah, your CBDC is never going to be widely adopted. It's going to cost you a fortune and pain to implement. You could spin up a nation coin virtually for free. So open offer, by the way. Any governments want to create a nation coin on Convex, we'll do you one, free of charge. I mean, it literally is that easy. Yeah. So
I think we should talk to the president of Venezuela. But
yeah,
I come back to Venezuela because there's a large inflationary problem there, and they are using Bitcoin to try to resolve that. At least the people on the street are.
Yeah.
Using Bitcoin.
I think
how would we solve a problem like that?
Yeah, the problem with the nation coin issued by a country which is not trusted is that is not necessarily more trustworthy than their fiat currency, because the whole point of a nation coin is it's equivalent to their fiat currency. Yeah, so if people don't trust your fiat currency anyway, then you might have to think quite carefully about, okay, is my nation coin, is there some way that I can make it more trustworthy than my fiat currency? And you could maybe do that by, for example, putting inflationary limits on it, like how limiting the amount that the government can print. That's quite an interesting idea. Yeah, so government could actually pre-commit to a maximum amount of money printing on the nation coin. But then if they can print money elsewhere and the nation coin's still pegged to it, then you go, well, does that does that help the situation? It's an interesting question. So
I was also wondering if they could peg it to like Bitcoin, and since they're already using Bitcoin, and that's a fixed amount.
They could, but then they're effectively issuing a wrapped Bitcoin.
Yeah.
So it's
Yeah.
not really a nation coin at that point, because then you'd have to hold the Bitcoin reserve.
Right. And
So
nobody's holding gold anymore anyway, right?
yeah, I mean, you could do it with gold as well. You could do wrapped gold token, but we've talked about that on other calls. But again, these are tokens that are wrapping some other asset, whether that's gold or Bitcoin or electricity, or land or whatever you like. Yeah, a token is just a representation ultimately of a right to some asset or other right that has value. And the nation coin specifically represents the right to that nation's currency. Yeah. No,
When you strip it all back, since the gold standard isn't backing the U.S. and the thing that is backing it is military, so basically your coin represents your state on the risk board, right?
I don't subscribe to that idea, to be honest. It's an interest. It's a fun one to explore. I'm actually think I'm with the modern monetary theorists on this. That the reason that fiat currency is valuable is because it's a tax credit. It's basically a way of paying your taxes, and people are always going to have to pay their taxes, assuming the country continues to operate, and assuming the country continues to operate, and you believe that the country will continue to operate. People are always going to have taxes. They're always going to need to be able to pay those. Yeah, and your money's value is effectively determined by the size of your economy and the scale of the taxation that you do, and you can print money as long as you print money proportionately to the amount of tax take. Then you can keep the price stable. If you print a lot of money and don't tax much, then yes, you're going to get inflation. And that's basically what the MMT guys say. Governments can print as much money as they like up until the point that inflation kicks in and they suddenly go, whoops, we've just undermined the credibility of our currency. So the nation state currency has this sort of very unique position of being something that is needed in vast quantities in nation states to pay taxes. Everyone needs it, so it's a natural currency for people in that country to use. They're going to have to settle their taxes in that currency. Yes, you can use other currencies, but ultimately you're going to have to convert them back to your nation currency to pay taxes and stuff. So it's got this natural advantage in specific countries' economies. So that is the underlying value of a fiat currency is the ability to pay taxes, and an established country where that is likely to continue for a long time. So I actually think that nation-state currencies are important. Not necessarily that they should be the only currency that gets used, but they do have a very important role in terms of how governments operate and how nations operate. That's why I think nation coin is a perfect compromise, or a perfect balance between having that assurance of being backed by a nation state and usable in that nation state in the way that a traditional fiat currency would be used, but also has the advantages of being a next generation global digital currency. So that's what I want to see. I want to see nation coins. I want to see those succeed in the world.
One of the values of the monetary theory, the modern monetary theory, is the redistribution of wealth, and that seems like what you've been talking about, Mike. Having more participation, reduce the inequality. Can you speak to how you think nation coins can help there?
So I would pay a UBI in my nation coin. So I think this is a no. I'm a fan of UBI. I think it's a great model. I think it's one of the best ways that governments can address inequality and get money into communities and support their economy. And there's a lot of great people written about tons about UBI and why it's good. I think it's a great model. I think nation coin will be a good way of distributing it. So if you give every citizen a nation coin account and just deposit UBI monthly into their account or whatever frequency you decide to do it. That's a good way of distributing the nation coin to end users, but B, I think UBI is going to be the way forward in terms of how you create fair economies in the future. I don't think anything else is going to work, to be honest, because I think enough jobs are going to disappear that UBI is going to become, or some form of income redistribution is going to be essential. And UBI is the simplest and fairest way of doing that. That's what I would do if I was making any of these policy decisions
if you were king.
In large countries. I think this is the natural thing to do, and even small countries. Yeah, I mean UBI makes sense there. And countries probably ought to be saying, okay, we're going to target paying out 15% of our GDP in UBI or something like that. Yeah, and whatever the GDP of the country is, they're just going to say this much is going to get distributed in nation coins via UBI, and that works out as X £1,000 per person or whatever that is. And then they can review it and they can increase it to 20% or drop it to 10% depending on economic conditions and stuff. But I think that would basically solve a lot of the issues with inequality. It would allow you to massively simplify things like benefits payments, welfare. You could replace most of them with UBI, and it would take you, if you use nation coins, it would take you towards a proper digital economy. That would be my sort of strategy. Suggestion from chat: let's only allow bartering. Yeah, I mean that's a good idea. I mean, I do like bartering. I think bartering's cool, but it doesn't scale very well. That's the only issue.
Yeah. You still need
good question.
Need to be able to put values on things.
About tax collection by smart contracts. So, are you thinking? Can you collect tax from things going via smart contracts?
It's not so much that you can or you can't, but it would just absolutely change the economy and the way businesses work. So when they make a sale and the VAT goes straight into the treasury or something like that, at the moment it's up to the companies to have tax software, whatever it is, and they've got liquidity for, let's say, 3 months, right? That could actually have gone to the treasury immediately, right? So, so no decision's been made yet, but they're talking about it. They think there'll be a problem if somebody says, well, we can actually have a budgetary change and get our tax in quicker. Yeah, who knows?
Yeah, but the government doesn't care when they get their tax. Back to the point, they can print. They don't have a budgetary constraint. They can print money whenever they want. So I mean, I think it's probably a bad idea to try and insert tax into smart contracts, and I think that's for 2 reasons. One, it's probably not clear from an accounting perspective until all the smart contracts have resolved what you actually made out of that transaction. Yeah, so you're probably always going to have to ultimately settle up accounts and net off balances and do the usual accounting stuff to work out what tax is due. I don't think you can tell what tax should be due on a single smart contract transaction, because a lot of them would not be taxable. Yeah, like if I
well, no, it's on the till roll exactly what the VAT is on every item.
Yeah, but smart contracts don't have that. They don't have a till roll. Smart contract payment wouldn't say what you received payment for. It's not going to be. The smart contracts are not going to implement a VAT calculation system.
It's very easy. It's just part of the payment. The money comes in, and
Yeah,
then you
I'm skeptical. I mean, also smart contracts are meant to not change, and tax laws change. So I think you've got to keep them separate. I would keep the money, the currency, and the smart contracts very, very clean, and then say, okay, you then have to do your taxes, and you can automate it. You can automate the tax calculation at the back end, but you have to do it at the back end. You can't do that really on the individual smart contract level because it doesn't know. It doesn't have the information, and it would be unlikely. Wouldn't make sense to give it the information.
Well, I think if you're buying something online, it is all perfectly known, right?
No, well, no, it's not.
I don't see
Not by the bank transfer. So when you transfer money via debit card, and someone receives £10 in their bank account, the bank doesn't know how much tax is due on that. Bank couldn't calculate it.
The trader does.
The trader might be able to calculate it later.
The side of the transaction, right? So they get some nation coin coming in, right, for something.
Yeah, but there's no way to for a smart contract to know what tax is due. We can take this one offline, but and I think it's a bad idea. I mean, that trying to put tax into smart contracts seems like the wrong place to do it, and probably going to add more complexity than it solves, to be honest. Smart contracts work best when they're simple and they're clean and they haven't got a whole bunch of excess concerns. So you know exactly what's going to happen. And if you've got a bunch of external tax oracles coming in saying what the tax rate is and changing a bunch of parameters, no one's going to use them because they'd just be way too clunky, even if you got them correct, which you probably wouldn't at that level of complexity. But interesting idea. I just think it's a little bit unlikely to work.
I got a question for you, Mike. Here in Colorado, we just got a new mayor in Denver who's setting up homeless shelters all over the place, turning hotels and stuff, motels into homeless shelters and stuff. And so Colorado itself doesn't have it's not a nation, right? So when you have all of these states that probably would love to do something like UBI, does it really have to happen at the nation level? Or is there a scaled down version that could happen more independently? And if that's the case, would they need to have their own monetary authority?
I think there's a couple of possible cases there. So the question is, can a regional authority,
right?
What do they do with nation coins? So if a national nation coin exists, then they can just use that. Yeah. Right. If that doesn't exist, then they're effectively going to have to issue a stable coin. Yeah.
Yeah.
And they might be able to do it with some level of local government guarantee, but they wouldn't be able to give a central bank guarantee.
Well, and Wyoming is issuing a stable coin.
Right. So yeah, they can do that. They certainly can do that. I think it's suboptimal because obviously you'd much prefer that people all use the same nation coin within a nation, and because again you're just creating friction if you've got 300 of little local municipality coins that are all effectively pegged to the same thing. Yeah. I mean, do users care? Not really. I mean, I don't particularly care as long as it's $1 and I can spend $1. If I have to worry about which dollar it is or how much of Wyoming dollars I have versus California dollars, that's hassle I don't really need.
So
it's possible.
I think you do need a nation coin, not a local coin, in order to do UBI.
You could still do UBI with a stable coin, a regional stable coin. So it's not you couldn't use it for UBI. It's that it doesn't have the full advantages of a nation coin. I think so. You're losing some of the advantages by doing that. It might still be a good idea, But issuing a stable coin is, you know, probably not something you want every single local municipality doing. You probably want people who know what they're doing, like a central bank in charge of that, rather than sort of local government
Right.
who don't really have central bank capabilities. So I mean, it's certainly possible, ambitious. You know, you could certainly do it on Convex fairly easily, um, but I'm still not sure whether it definitely doesn't have the full advantages of a nation coin. It might still be a good idea.
Yeah, they're being criticized though, right, for higher taxes. The whole idea of UBI, and thinking that people will get lazy and
Well, that's a very
lower the
that's
productivity.
a very separate philosophical question. But there has been
Right.
quite a lot of good evidence that giving UBI actually increases things like entrepreneurship and
Oh,
improves things like health outcomes. So your
mm-hmm.
society gets healthier. It does more innovative stuff. People do the jobs that they want to do rather than the jobs that they're forced to do, and it injects money into local communities, which tends to reinvigorate local economies. So I mean, the evidence for UBI working is just astoundingly good. Yeah, and if you're worried about about giving too much money away and taxes, well, you will just replace some of the less efficient ways of distributing money because government already distribute vast amount of money. Yeah, UBI
Right.
is just a better way of doing it. Um, so what? Oh, good question. What's the scalability of Convex if it was used globally for multiple nation coins? Um, Totally fine. I mean, we can we could run 1,000 nation coins on Convex with absolutely no difficulty, and at global levels of transaction volumes, we can easily get as many transactions through Convex as the Visa network or something like that. So it wouldn't be a problem at all on Convex. So yeah, I mean, Convex is like the perfect solution in some ways. It's designed for the infrastructure that's going to enable these kind of innovations and these kind of currencies, and it's an advantage in fact to have multiple nation coins because then currency exchange becomes seamless. Yeah, you can do all your currency exchange via decentralized exchange. So if countries want their currency to be globally used and interoperable with other nation state currencies, then great. They're all sitting on nation coins on the same network. They can all be traded on a decentralized exchange, and that's the magic of decentralized finance. Just happens then in order to create effective currency markets. Would layer twos drop out of the market? I mean, interesting. I think there will be lots of networks around for a long time. Layer twos are generally addressing shortcomings of layer ones, but adding their own shortcomings. I mean, I don't really like to describe Convex as either a layer one or a layer two because it kind of replaces both. But yeah, I mean, I'd have thought your nation coins could be issued on layer twos or layer ones in the blockchain space. I think both would work. Obviously, transaction fees on layer ones tend to be prohibitive. So probably layer twos would be the most natural choice for nation coins, or at least some very low transaction fee layer one. I mean, obviously I'm biased, but just use Convex. I mean, you don't need to be making these compromises.
Does it affect the global state accounting if it's on a layer two?
Um, you mean for the nation coins accounting?
Yeah, accounting for the nation coin. Would that screw it up being on a layer two because
No,
it's
I
not
don't
a
think
global
so. I
state?
don't think so. I mean, you can have it as a token on a layer two absolutely fine, and then you might, yeah. This is okay. Well, I mean, I've ranted enough about why I think a lot of the layer twos are bad designs, but particularly anything which is sharded, you're probably going to have to issue a nation coin in each shard. Otherwise, you'd have to do cross shard transactions to use your nation coin on the layer two.
Oh my gosh.
No, seriously, I mean, this is why shards are a bad idea. Yeah, because effectively what they're really doing is creating a whole bunch of independent networks that you have to then coordinate across. So yeah, nation coins on a sharded L2, I really wouldn't want to do that. That sounds like a painful idea. I'm sure someone will try it at some point, but they'll realise it's a bad idea. Because then you're going to pay the cross shard transaction fees and all of this, and and the architectural complexity would go through the roof, confirming transactions and stuff like that. So you're much better on a global state network like Convex, where you've actually generally got atomic global state transactions across the whole thing, rather than isolated on different shards, because that just adds a lot of extra complexity. But good question, yeah, about which. Yeah, I mean, I think the nice thing about a nation coin though is the strategy of issuing on multiple networks, kind of gives you flexibility. Yeah, so I mean, so Convex is obviously really good for end user transactions, super fast transactions, super cheap transactions in like consumer devices, products, end use cases, these kind of things.
Micropayments,
this kind of thing. So if your low latency mass adoption apps is your sweet spot, then Convex is the perfect fit for that. So you want your nation coin there. On the other hand, if you're really wanting to do swaps with large liquidity pools, Ethereum is the place to be at the moment. Yeah, so you'd want your nation coin on Ethereum as well. Yeah, and there you've got like the big transactions where people don't really care so much about the speed or transaction fees. They want big liquidity pools and stuff, and that you want your nation coin on Ethereum. So and the nation coin strategy says you have one of these for each network. Yeah. So that you provide effectively the central bank is providing the bridge and the issuance across multiple networks, that then makes it easy for people to use and swap between them. And probably there might be some tools to help people move across these with their nation coin account. But yeah, great questions, and I think
we're at the top of the hour.
Exciting topic. Going to see how it evolves over the next few years. But I'm hoping we can onboard a few nation states that actually want to try running a nation coin on Convex. It's super easy for us to do. It'll be super efficient to get it up and running, and might open some people's eyes about the art of the possible.
Yeah. Awesome discussion. Thanks for having us.
Great to see you all as always. Thanks for all the great questions, everyone who joined on the call, and also everyone on the chat. And hope to see you all again soon. Bye for now.